Many thanks for making time to speak to us. This whole development around the fact that we are seeing stakeholders, well, should I say shareholders, come to the table and make it very clear that they're not content with the executive as it is. How drastic is this?
Look, it's not something that has happened overnight. It's actually really built up over the last 2 years. We've been engaging with the management team of Grand Parade around some of the concerns that we as shareholders have had. And we know that other shareholders have done the same thing as well. And over the last 18 or 24 months, there have been various concerns that we've raised around corporate governance, around the independence of the board, around issues of capital allocation. And unfortunately, a lot of those concerns and recommendations that we've made have largely been ignored by the company. So, we've been left with very little choice but to call this extraordinary general meeting to be able to implement what we believe are changes that will benefit all shareholders in the company in the long run.
Right, I'm very interested in what you've just mentioned there about the independence of the board, as well as, shall I call them irregularities in where some of that capital is allocated. In terms of what the information that you have, when you say the allocation of capital, where have funds been directed that's led to the financial position that we are seeing in Grand Parade?
Yeah, so let me maybe just clarify. It's very important. There's no irregularities that we are aware of in terms of the business. It's specifically around the decisions the board has taken in terms of where they've allocated capital. So, Grand Parade had been historically a very successful business. It had been a shareholder in a number of casino or gaming assets. But a couple of years ago, when they acquired the rights to Burger King in South Africa, they became an operator of assets and didn't really have what we believed that was a necessary experience in terms of the quick service restaurant industry. I think that's borne out perhaps by the results that we saw coming out on Friday last week, showing, again, after sort of 6 years, ongoing losses in the Burger King franchise in South Africa. In spite of not having that proven track record, the company continued to embark on expanding its food business through the opening of Baskin-Robbins and Dunkin' Donuts. Again, if you just look at the latest set of results, there's about 100 million rands worth of losses in the last 2 years coming out of those two businesses, in addition to about 1 billion rand that has been invested in the Burger King operations in South Africa. Neither of those assets showing any return for shareholders. So that was our main concern around the allocation of capital. Your earlier point around the independence of the board, the non-exec members, 2 of them in particular, sat on the board for 21 years, which is since the inception of the company. Another one for 10 years. When you've been involved in a business for that long, one has to really question whether you are truly independent or not in terms of your ability to assess and guide the strategy of the company. And that's where we have a real concern.
Right. Ricco, let's talk about some of the headwinds that might have not been foreseen, at least in the near term. Take, for instance, the sugar tax and maybe some of the costs that have come up in the past a few months leading up to these results that we did see. Who's to say that maybe some of these were, should I say, out of the control of the board as it is?
That's a fair point. I mean, it has been a particularly tough operating environment, but not only for Burger King, but for anybody in the quick service restaurant industry. But in spite of that, we still believe that if you look at the original projections and plans that were put on the table, and we're not just talking about 1 or 2 years here, we're talking about 6 years ago that the decision was taken to invest in Burger King. They're tracking far behind, both in terms of timing and in terms of generating profits relative to the original objectives that were put on the table. So we don't think that the tough economic environment is squarely to blame for the challenges that the business has been facing. Definitely not.
Right. Now, you and some of the other shareholders have come up with a list of possible candidates to form a part of a renewed board. What informed some of these names that you put forward? And really, how optimistic are you that they will become part of the team should they be voted in?
So, a lot of time and attention went into selecting these 4 candidates. Both in terms of their experience in the various industries that Grand Parade grew into over the last few years. Some of these directors have been involved in the quick service restaurant industry, in the fast-moving consumer goods industry, in the gaming industry, have served on multiple boards as non-executive directors, so they understand their fiduciary duty and responsibility to shareholders. And we believe, this change is necessary to ultimately turn this business around. We're not necessarily challenging the strategy per se. It's not up to shareholders, by the way, to decide what the strategy of the business is or who is appointed in an executive capacity. We just want independent oversight, ultimately ensure that shareholder value creation is, or at least the trend in terms of shareholder value creation is returned. And we believe that these 4 candidates that we proposed are very well positioned, able to do that. But at the end of the day, all shareholders will have the opportunity to vote based on the merits of the 4 candidates that have been put forward. It's not up to us to determine. And their CVs have been made available, and many of them are very well known in the business community in South Africa. So they will be able to assess for themselves the merits on which these candidates.
Right. A final question unrelated to this particular matter. Very briefly, you are part of some companies that have joined the class action with a Dutch law firm against Steinhoff. Just very briefly, the reasons around that and really what you'll get out.
Look, I'll keep the comment fairly brief, and I'm sure you can understand the reasons behind it. But at the end of the day, our clients have incurred losses, and it's our duty and responsibility to ensure that we participate in whatever means are available and at our disposal to recover as much as we can on their behalf.
Ricco, many thanks for making time to speak to us, and I will definitely be keeping up to date with that particular story on that lawsuit. That was Ricco Friedrich, who is a director and portfolio manager at Denker Capital.